Okay, here we are. This is the Grandma's Jars app. If this is the first time you've logged in, what you are seeing in front of you here now is the setup wizard for the Grandma's Jars app. This is a 7-step process that will take you through step by step setting up your budget. So you can see in the middle of the screen here, we have a 7-step timeline starting with account settings on the left, and then we go bank accounts, debts, income, jars and expenses, summary page, and then this month's update. So they're the 7 steps that I'm going to walk you through in this video using Dean and Emma, our case study, as the example for how we do it. So let's just start with the basic information. Dean and Emma live in Sydney, Australia. So their currency is going to be the Australian dollar, which is already there. We can see the next thing is the time zone. They live in Sydney, as I said, so they're GMT plus 10. The time format, we'll use a 12-hour time format. The date format is day, month, year. And then the currency format for us in Australia is comma, then decimal point. Now, I've worked with clients all over the world, but I didn't realize until we were going through this development process that there were actually different formats for the way currency was presented. So you learn something new every day. Okay, so that's pretty simple. That's the basic information. If we now go down to people on your account, this is basically just your personal details. Now, the more you can put in here, the better. Please be assured that your information doesn't go anywhere, okay? We hate spam. We are not going to give it to anyone. To get into your personal information here, you can see next to Dean Smith, if I click on this pencil here, we've got the forms to fill in, but you can see a lot of it's already filled in, and this is because this is the information that Dean gave us when he registered. So a lot of that is pre-populated here. But can I encourage you, please go through and add your details more specifically, especially down the bottom here, you can see contact details. If you're a coaching client particularly, please make sure you've got some contact details in there, particularly Skype or mobile numbers. That would be really useful. So I'm just going to save that user there. Now you'll notice that was all Dean. If we want to add a second user, we can then go up to here and go add new person, and in here we can start to add all of Emma's details. So she could type all of that in there. She can have her own username, own password, and down the bottom here you can see we can also copy across all the information that Dean had put in for address and so on. So once you've entered that, click save. So let's move to the next step now. Now the next step you can see up here is going to be bank accounts. So to get to that, I will click on next step. Okay, so we have now moved to the bank accounts page. You can see up the top in the timeline that the bank account square is turned purple, and below that you can see bank accounts. Now highlighted here, you can see the central account. The central account is a default account that will turn up in your budget when you're first starting. Now the reason we have the default account there is because I have a very specific bank account structure that I recommend everyone adopts. Now later on in this course, I have a whole lesson dedicated to the ideal bank account structure, and I strongly recommend that you have a look at it because the structure in there is one that I've been using for 15 years with my coaching clients. It really works. It really helps streamline the way you manage your money and keep things really efficient. So the central account is really core to that because the central account is an account that receives all of your income and all of your direct debits, periodical payments and transfers come out of that one account and keep things really simple. So when you open up your bank accounts page here, you will actually see the central account is already there. Now, you don't need to use it, okay? You don't need to use it, but I strongly recommend that you do use a structure that I'll talk to you about in a future lesson. The savings account I've just added in a minute ago because typically it's a 3 bank account structure we have in there. What I want to show you now is how do you add another bank account to this system. So if I click on add account, quite simply a box will appear here with 2 fields to fill in. The first one is what is the name of the account. So what I'm going to pop in here is everyday account. And let's just say we've got a starting balance of $1,000 in there. and I'm going to click on Add Account. You can see that has now appeared in my list of accounts on the left-hand side here. And if I click on it, the details of that account is going to come up here on the right-hand side. Very simple. You've now got my ideal 3 bank account structure there. Obviously, you'll need a bit more explanation around that, but we've got a central account, an everyday account, and a savings account. I can go into central account, and if I want to, I can again click on the pencil, and if you want to call your account something different, you can change the name of it here. So let's just say, let's make this Dean and Emma's central account, and I can just click save, and I will save that balance there. Okay. If I want to delete an account, I just need to click on this garbage can here. Now, if you want to add a credit card, you click on this button here, up the top. Now we know that Dean and Emma have 2 credit cards. They have a Go MasterCard and they have a Visa. The Visa, we'll add that in here. Let's just say Visa credit card. And the balance on that at the moment owing is $5,500. So if it's a balance owing, you've got to enter it as a negative figure. So we'll go 5,500. This button here, is this credit card active? A debt is active if it can be both used to buy stuff and as a debt. So a credit card can be, it is a debt, but it can also be used to buy stuff. So are you going to use it as a source of funding to buy things? In this case, yes, we are still dependent on the credit card, so we will leave that box ticked. The current payments. Now, if you pay your credit card off every month, you basically don't need to put anything in here. This is the payments you are making to try and get an ongoing balance down. So in Dean and Emma's case, they're paying $200 a month off their credit card. The payment frequency, well, as I just said, they're doing that monthly, so we can say that's going to be monthly. The interest rate is around 18% on their credit card. If you don't know what this is on your credit card, have a look at your statement. It doesn't really matter whether you've got it in here or not. It doesn't change any calculations. We've just got it there, so we've got all the details in one place. And the next payment date, we can pop down here, when is their next due date? And we know by looking at their credit card statement that Dean and Emma's next due date is going to be on the 5th of October. So they've already paid it for this month, so the next one is going to come out on the 5th of October. And which account do the payments come from? Well, as with most things, it is going to come from Dean and Emma's central account. Has this credit card got interest-free period? Unfortunately not, so we'll leave that unchecked, and then I select Add Account. Now, any debt, okay, and credit cards are debt, any debt that I tick as active will show up both on the accounts page and on the debts page. So you're going to see it doubled up a bit, but when you think about it, the credit card is a debt, but it is also a source of paying for stuff, so it needs to be in both. So there we go, we've added an account and we've added a credit card to the system, and if we just go down here, you can now see the Visa credit card there with a balance owing of $5,500. That's pretty simple. Hopefully that makes sense. Let's go to the next step. The next step is setting up debts. So I'll click on Next Step. We are now on the debts page, and you can see highlighted up the top here, we've got debts in purple. On the left-hand side, we can see the honeymoon loan and the Visa loan, so a couple of debts we've already entered for Dean and Emma. So when we entered the Visa just a minute ago on the accounts page, it's also now showing up on the debts page. If I add in a new debt, I just simply click on Add a New Debt. Up the top here, we'll make it name of new debt, and let's just put in mortgage. Mortgage has come up there for us. And what debt type is it? So it's a home loan. So if I go down here and select home loan, this debt is not active. So in this situation, their debt is not being used as a source of paying for stuff. Now, if it was a line of credit or a redraw facility, it might be, but then in this instance, their home loan, as all good home loans should, is only going to go one way, and that is down, so we don't have this box ticked. The balance owing is $296,000. The current payment on that is $1,800 per month. So they're making a monthly payment of $1,800. So I'll select monthly down here. The interest rate is currently 4.2%. and the date of the next payment, this comes out on the 28th of the month. So we can see down there, 28th of September, we're going to select that. And which account? Again, it is going to come out of Dean and Emma's central account. And if I just go down a bit further here, it's asking me, has it got an interest fee period, or is the loan tax deductible? Unfortunately, neither of those are true, so I won't be ticking those boxes. So let's just add debt. When I've done this, you will see on the left-hand side now we've got mortgage comes up, $296,000. And again, if I want to select the details and have a look at the details, I click the pencil and I can go in here and change any aspect of this at any time. So just select close. I can also delete any of these expenses at any time, or any of these debts at any time, by clicking on the garbage can here, but I won't do that right now. Let's now go to the next step. The next step is where we start to get interesting, because step 4 and step 5 is about entering our income and our expenses into the budget. So let's have a look. Income. You can see here that I've already entered Dean's income. So let me just highlight that. Let's click on this pencil here so we can have a look at it. Dean's income is $1,625.70. He receives that fortnightly, and the date of his next pay is the 25th of the 9th. So we're coming up to, actually, sorry, that's wrong. His next date should be the 28th, so it's going to be this Thursday. So 28th of that 9th is his next payday. And again, all his income is going into the central account. So I will select edit income. And that has just updated Dean's income there. Now, if I want to add Emma's income in there, I can click on add income. I can type in here Emma's income. Okay, and I can put in here 2,033.30 is her income. I can select a frequency of fortnightly. She gets paid fortnightly as well. She also gets paid this Thursday, 28th of the 9th. Goes into her central account. I just click add income. And what you will now see is Emma's income has appeared on the left here as well. Once again, if we want to, we can edit Emma's income. So if I just select that, we can edit Emma's income if we want to, or we can delete Emma's income if we want to. So there's the income. Let's just go to the next step now. Okay, here we are. Step 5 of the setup process, the jars and expenses page. This is by far the most important step of the entire setup process. Getting all of your expenses off your budget worksheets and into the system is such an important part of the process. It will take time. This will take you a good 60 minutes, maybe even to 90 minutes to get set up properly. But please take the time to do it, because once you've done it, it's all in the system and it all becomes just tweaking the numbers after that. So let's have a quick look at how it all works. Over on the left-hand side here, we have a list of your jars. So your jars, remember, are just an expense category. These expense categories reflect the expense categories on your budget worksheets. So if we think about every day, on your budget worksheets, you will have an everyday jar, and in the everyday jar, it'll be things like groceries, petrol, parking, entertainment, takeaway, bought coffees, and so on. You then have a utilities jar, a communications jar, a grooming jar, a health jar, and so on. What we need to do is take the expenses off the budget worksheets and put them now into this system. So at the moment, the everyday jar is highlighted on the left, and on the right-hand side is the list of the expenses that are in this jar. Now, right now, all I've popped in there so far for Dean and Emma's expenses is their groceries of $165 per week, which works out to be $716.97 per month. Okay, so the system has done that calculation for you. You will notice here in the expenses that there are 3 types of expenses. We've got regular expenses, recurring expenses, and one-off expenses. Regular expenses is where most of your expenses will go. So if you're looking at expense going, I don't know where to put it, always put it under regular expenses as a default. Recurring expenses are a very specific type of expense. Recurring expenses are typically those expenses that we have direct debited periodical payments, periodical transfers, where it's the same amount on a regular frequency. So it could be your internet bill, for instance, that gets direct debited from your bank account. It's the same amount every month and it occurs on the same day. And if you set an expense up as a recurring expense, the system, so the budget, will automatically put a transaction through on the next due date every time it occurs. So you don't actually need to be putting those in. The system will automatically do that for you. Now, one-off expenses, you should only use this sparingly. One-off expenses are things that are going to come up as a one-off. You know they're going to come up at some point, or you can plan when they're going to come off, but they are going to be a one-off expense. So for instance, let's just say you're setting money aside to replace your laptop, or there's a very special trip that you're taking. Let's say it's a conference. It's a one-off conference that you're going to go to. You know when the date is. You know how much it's going to be. So we can put that into the system. The system will then work out how much you need to save per month between now and when that comes up so that you have enough to cover it. So I'm going to go through now and just give you an example of one of each of these expenses and how you enter them into the system. It's really simple once you see how it's done once. It's just the same thing over and over again. Let's go to grooming. So grooming, we've already got clothes in the grooming jar, but what about things like haircuts or shoes or cosmetics? So these are regular expenses because they're not a set amount. They do come up fairly regularly, but it's not to a set frequency and it's not to a set amount. So I'm going to pop it under regular expenses. To do that, I go next to regular expenses, I click on add expense, and let's just say we'll pop in there shoes. So shoes, Dean and Emma want to put aside $50 per fortnight for shoes. Doesn't have an expense date, so we can just leave that blank. It will default to today's date, but that's okay, that's fine. And we were going to put in here fortnightly, so $50 per fortnight for shoes, and Dean and Emma are going to pay for that from the central account. Unfortunately, shoes aren't tax deductible, so we won't tick that box. So you can see here, shoes have come up, $50 per fortnight, and $50 per fortnight works out to be $108.64 per month. So if you remember, the calculation very basically is $50 times 26 divided by 12 gives you the average monthly figure. So that's an example of a regular expense. Let's now think about a recurring expense. So if we go to the communications jar, a really good example of a recurring expense is mobile phone bill. So we're going to go to recurring expenses and let's just add in Emma's mobile. We can select $60. So it's $60. Frequency is monthly. So we select monthly. The next payment date, so these come out for her on the 12th of every month. And again, it's going to come out of their central account. It's not tax deductible, unfortunately, so I'm going to add expense. And what will happen now is that every month, $60 will be generated in the system. So it's $60 per month. On the 12th of each month, Emma does not need to now put that in manually. So now, let's now have a look at an example of a one-off expense. And I gave an example before. Let's just say Emma and Dean need to replace their laptop because their old one's starting to die on them. That would typically go into the household jar. So we go to the household jar. Next to one-off expenses, we click on add. We'll type in here laptop because that's what they want to buy. Pop in laptop. Let's say they're going to spend $1,500 on their laptop and the due date is going to be June next year. So I know it's a little bit away, but let's say June next year because they know they need to save for it. So we'll select June the 1st. The method of payment again will be from their central account because they want to save towards it, so that money should be accumulating in their central account. Do you want to save for it over time? Yes, we do. And no, it's not tax deductible, so let's just add the expense. And what we will see down the bottom here then is we've got a laptop. It's $1,500. The due date is June next year. They've got 8 months left, not including this month, 8 months. They've saved 166.67 so far, so that's what they've allowed for this month, and they've got another 8 months going forward of 166.67 on a monthly basis, so that it accumulates in their household jar, so that when they get to June next year, they'll have $1,500 sitting there ready to buy their new laptop. Okay, so while we're on the jars and expenses page, there are a couple of other things that I need to show you. Firstly, over on the left-hand side here, you will see that there is a default list of about 20 jars. Dean and Emma don't have kids. They're not planning to have kids anytime soon, so they can get rid of the kids jar. And the way to do that is to click on the kids jar, go up to the garbage can, and click remove. It'll ask me, am I sure I want to remove it? I go, yep, I sure do. And I can click remove jar. I've deleted that jar, and you will notice now that there is no kids jar in this list of jars. Emma has a business, a scented candle business that she's pretty interested in. She can add a new jar. She can put in here scented candles. Click on create jar, and then down the very bottom of the list here, you will see a new shiny jar called scented candles. Now, Emma might find that she's using this jar quite regularly, so she doesn't want it tucked away all the way down the bottom there. So she can click on reorder jars. We can go back down the bottom here to scented candle jars, and we can actually drag that scented candle jars up the list here. So you can see now I've moved from the very bottom halfway up the list. If that's where she's happy to have it, we can now go back to the top and save the order of the jars. So that's adding and deleting jars. If we go down the very bottom here now, you can see this progress bar. And what this progress bar is showing you is your expenses versus your income. So the purple bar is the income. So you can see that their combined income is $7,949.62. And so far, the expenses that we've entered are $4,309.97. So they know at the moment they've got $3,639.65 up their sleeve. The ultimate goal, of course, is to make sure that your income is greater than your expenses. So this will take a bit of toggling. Can I suggest, though, that the setup phase is not the place to start trying to reduce your expenses? What I want you to do is just get it all in the system to start with. All of your expenses. Put them in there. Doesn't matter what this line looks like down the bottom. And then when you move to the main budget, that's the place where I want you to start reviewing expenses and pulling things back. So there you have it. That's the jars and expenses page. Hopefully you see that it is pretty simple to enter expenses. It will just take time. So take out your budget worksheets, go through it one jar at a time, and start entering expenses into each jar. Most of your expenses should fall under regular expenses. If they're a direct debit or a periodical payment coming out, then yes, they should then go under recurring expenses. And very rarely should you be using the one-off expenses. Just a reminder that anything that you can do on the setup phase, you can do in the main budget. So please don't get bogged down in this setup phase. Get most of it in there, but don't get it perfect. Once you feel like, yep, I've done a pretty good job, I've gone through, I've got my income, got my expenses, they're all in there, get through the rest of the setup phase as quickly as you can and move to the main budget. I do not want you to get bogged down here. Okay, let's now go to the summary page. Now, the summary page is exactly as it sounds. It is a summary of everything that you've put into the system so far. So there's really nothing to add to this page. It is merely an opportunity for you to have a look at what have I put in so far. So the first thing we come to is people on your account. So we entered people on your account during the account setting phase. You can go through here and click on edit people if you want to make some changes, and that will take you back to the accounts settings page. A new feature, and this will be heavily prominent in the main budget, is a position summary. This is a really important part of the budget. Now, I don't want you to worry about it too much at this point in time, but what this is showing you is what is my income, what am I allocating to my expenses, and what have I actually got left over once I've spent that money, or once I've put that money aside in my jars. So we can see over the left-hand side here that Dean and Emma's minimum monthly income, so that's their 2 pays per month, minimum monthly income is $7,318. Their average monthly income, which times their fortnightly incomes by 26 and divides it by 12, is $7,949.62. They are allocating, at this point in time, $4,309.97 to their jars. Now, if you remember, we haven't actually put all their expenses in yet. So this is a false figure, but you can see as it stands right now, we've got about $4,309 of their income allocated to their future expenses. That means that based on their minimum monthly income of $7,318, they should have a surplus of $3,008.03, and based on their average monthly income, they should have an average monthly surplus of $3,639. So it's pretty simple, comparing income to what we're allocating to expenses and what have we got left at the end of the month. If we go down here now, you can see that we've got a summary of the bank accounts that we've entered into the system. We've got a summary of the debts that we've entered into the system so far. And we've got a summary of the incomes that we've entered into the system so far. If we go a little bit further down here, you will see a summary of your jars. Now you can see there's a lot of empty jars here because we haven't entered the expenses yet. But here is a summary of the jars. So we can see the total amount allocated to each jar on a monthly basis. And below that, you will see a list of the expenses. This will give you a nice condensed view of exactly what you've allocated to each jar. If we take it a little bit further down, again, something new, and this is a budget shortfall calculator. There is another one of these where you can get access to this again in the main application, so I wouldn't worry about it too much at the moment. But the budget shortfall calculator is super important because the basic premise of the budgeting system is that you are going to put aside 1/12 of all your future expenses so that as those expenses turn up, the money is sitting there in your jars ready to pay your expenses as they turn up. Now, the problem with this is that in the first year, you may not have 12 months until your first lot of big bills start to turn up, which means you could find yourself short. So the purpose of this shortfall calculator is to look at, well, when is the next due date for your major expenses? And if I'm putting aside 1/12, am I going to be short on any of my bills as they turn up? So that is the point of this calculator. This calculator is in the main budget, and we will look at it in more detail when we get to the main budget. So for now, just know that it's there, and that's probably all you need right now. So that's the summary page. We can now move to the final step by clicking on Next Step. Welcome to the 7th and final step of the Grandma's Jar setup process. I am so excited that you have made it this far because you would be amazed at how many people give up before they get to this point. Nothing we have done is hard. It is just a little bit time consuming. So I'm hoping you've got to this point and you are ready to get stuck into using your budget. And I don't want to hold that up any longer. Step 7, there is a video up the top here that you can look at that will explain how to use this page. But my suggestion to you is just ignore it. We don't need to use this page now. We've put some new features into the main budget, which means that you can go straight to the bottom here and click on Complete Setup and go to the main budget. Now, if you're busting to know what this page is about, as I said, you can go up here, you can click on the tutorial, you can watch your tutorial, but I would prefer you took the time to start getting your head around all the features in the main budget. So well done on getting this far. My recommendation right now is go to the bottom, skip this step, and click on Complete Setup and go through to the main budget. I look forward to seeing you in there.